We're talking now with Erik. Erik, you're with Allworth Money Matters.
Hi, Pat and Scott. Thanks for taking my call.
Yes, sir.
Got a question on additional mortgage payment, and then also once I give you all the numbers, just general thoughts on kind of my wife and I's overall situation.
All right.
So not really your typical client. Don't have a lot of money. I think we started really late in life. Other than a good military pension, I think we're behind, but we're making good choices now.
Slow down, Erik. You weren't able to save a lot of money while you were in the military? Am I hearing this right? You weren't making those fat stacks?
Well, yeah, it's a little hard to do, but
yeah. No, thank you for your service.
Thank you. We get it. We get it.
Guys. Yeah, sometimes it's just hard to find some extra ends there.
Well, no kidding.
But yeah, we overcame some bad decisions. We mostly agree about the future and how to budget our money currently. Like I said, I think I know your answer because I've heard you talk many times about additional mortgage payments to other listeners, other callers. But still, just wanted your thoughts.
How old are you?
Wife and I are both 46. Oh, here we go. I think I'm going to try and impress you. I think I got all the numbers ready for you guys.
Okay,
right,
perfect.
What's the house worth?
All right. We're wife and I are 46. We have one adult kid out of the house.
Wow, good for you.
House is worth $770. We have a 30-year fixed mortgage. Current remaining balance is $607. Mortgage payment is $3,300 a month.
What's the interest rate?
2.125 interest rate.
2.25?
2.125.
Is that a 15-year mortgage?
30-year VA.
Wow.
That's important
Okay.
too.
Okay.
I was gonna say, that was the lowest 30-year mortgage I've ever heard.
That's incredible. All right,
Do
we
not
know the answer.
pay extra
Don't
payments
pay
on that.
a penny more on this thing. In fact, call them up and see if they'll extend it to a 60-year mortgage. Unbelievable.
Okay, that's exactly what I thought you were going to say, just because of the cost of money. And, I really am only making, over the course of these additional payments, one additional payment every year. And
I wouldn't make any additional payments. It's 2.25%, two and an eighth.
Yeah, unbelievable.
I mean, if you could borrow more money, I'd say borrow more money at 2 1/8.
Yeah.
If I could borrow money at 2 1/8, I'd do it all day long.
If I could borrow money at 2 1/8, I'd retire.
Borrow $1 billion at 2 1/8.
I'd borrow $1 billion at 2 1/8, and I'd lend it almost like banks do. It's weird.
I mean, but if let's say you want to retire at 65 or whatever the number is, and you might calculate what the balance will be at that time and say, hey, maybe we have a side fund that we set up, which this is you still wouldn't want to pay off the mortgage,
Yeah.
but at least something so you've got the cash equivalent so you can
match maturities.
Yes.
Okay, so what's the next? Give us the rest of the financial situation. We'll give you a little tune up there.
I appreciate it, because that's what we're trying to do, is be diverse and efficient so that we can really make headway smartly. So salary is $187. My military retirement, $4,800 a month, and our health insurance comes out of that. I get additional VA disability of $2,100 a month. Both of those have cost of living adjustments annually.
If Erik, if you talked about how you're behind on the game, if you calculated the net present value of that roughly $7,000 a month pension and
part of it tax free, it's worth millions.
Massive.
It's worth millions.
Yeah. I got 1.6 over the next 20 years.
Oh, got it. You did the math. Okay. So you get it. So when you say you're behind, you're not necessarily behind.
Well, if it wasn't for the retirement, I'd be freaking out right now. But
if I didn't, but if I had eggs, I'd have bacon and eggs. If I had bacon, it is. It is there. So okay. So $84,000 in benefits, veterans benefit, a portion of which is tax free.
Yep. 401k, $65K. I maxed the employer contributions, and I maxed the 401k this year, but I didn't do it last year. But from the foreseeable future, I don't see any reason why we're not going to max it out.
Okay.
I have a separate IRA with 18.5. I maxed it out last year, and I'll max it out this year. Separate brokerage account, $28,000. High high interest savings account, money market account. I got 26,000 at 4.25%. I've been watching that one because it's already gone down 0.25%. So just maybe possibly move that to another higher one.
Yeah, you're probably okay.
I've got 2 life insurance policies. I'm only the sole income in the house. So one through work and another one through the insurance company, totaling $3.4 million. I've got 2 car payments. One of them will be paid off in January, or I might just pay that off early. It just depends. That'll clear up some additional money to put towards retirement savings. And anything outside of that in the budget, I'm putting in about $1,900 into emergency savings account.
And what's the outstanding balance on the car?
The one car is only about $1,300. The other one still has 4 years. Still it's about like 45,000. I think.
Have you been in this ballpark salary area for the last few years?
Yeah. So I retired 3 years ago, and since then I started at a little bit less, but the last 2 years.
Okay. And what were you making before you retired?
More like 90,000.
Okay. So some of this you're just catching up on some things, right?
Yeah.
Yeah, because
a lot of debt, a lot of consumer debt out of the way.
Okay,
right.
you're perfect. Look,
Yeah,
you
good
are
for you.
you're perfect.
So
here's what
you're not spending all the money that's coming in now. You have been catching up on some stuff.
Yeah, my wife would like to spend all the money I got coming in, but I got to make sure to reel that in.
So what is the interest rate on the car?
The one that's left over, I think, is 2.9%. The one I have 4 years left on. I said I'm not worried about the one that only has $1,300
Okay,
left.
all right.
That's over in January.
I would, if I were in your situation, I'd contribute the absolute maximum to the 401k.
And then you would
pay off the cars.
But it's 2.9%. It's fixed. So what's the point? He's earning higher than that. And then you would what, Scott? You'd convert that IRA to a Roth. And then you'd make a contribution to the IRA every year, and you convert it to the Roth.
A non-deductible. I'd convert your. Well, he's got the 18,000.
I know, but he just put those in the last couple of years. So what you want to do is.
You guys say that because I'll probably be in a lower income bracket when I actually retire.
No.
I don't think so.
I would talk to the advisor about when we see one for sure.
Okay, so what you want to do is you want to convert that existing IRA for both you and your spouse into a Roth IRA. And then you want to actually make that contribution every year and convert it the very next day. And the reason is you're in a 24% tax bracket right now. Actually, you're probably lower than that. You're 22%.
No, because some of the pension's tax-free.
Some of the pension's tax-free. So you want to do that so that you can push as much away into savings as you can.
I mean, you are in such a different financial situation than you've been most of your life, right?
You
were married relatively young. You had a child. You've raised a child. Child's grown.
The child's a self-feeder now.
Yeah. So, I mean, your wife wants to spend, you can afford to spend some now, right? Like, you can afford to, let's do that, whatever you want to spend the money on. But as long as we're making sure that, because you're gonna get used to this lifestyle.
That's what I'm afraid of.
Yeah.
I'd rather save it than spend it.
It'd probably be helpful to do some real planning and saying, if we want to retire at 60 or 65 or whatever the number is,
this is what we need to do.
Yeah. And that'll say, all right, in addition to the maximizing the 401k, do we need to save much more? How much more? But given the fact that it's
your new job, will it have a pension when you retire?
No.
No, I've got the 401k and that's it. No other pensions through the new employer.
Okay, yeah. So you want to maximize the 401k, and then you want to make the IRA contributions non-deductible and convert them. Go ahead and convert that IRAs, both you and your spouse, immediately into a Roth. And you want to be as aggressive as you possibly can.
And you probably want to be saving some more.
And you probably
otherwise, I think really running some numbers to get it.
He knows exactly. This guy's super disciplined. He's beating himself up because he was
don't beat yourself up. You're in a great.
He was living a little bit above your means while you were making this salary, but you're not living above your means now.
Maximize your 401k. Build up that emergency reserve. Call us in a year.
Yeah, awesome.
All right,
you're great. I wouldn't worry about anything.
Job.
And you've got tons of life insurance. If something happened to you, you're taking more than good care.
Good job. Make the IRA contributions, convert it to a Roth, and call us in a year, 18 months.
All right, sounds good, guys.
Thanks,
Appreciate the
sir.
call.
Appreciate
All
the
right,
call.
see ya.